Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 27th of June 2024. So crude oil prices have risen despite the fact that we had a bigger than expected inventories build the day before, which indicates that the market probably expects a tighter market later in the year. WTI has held above key support around the $80 area, which was previously resistance, as you can see. It bounced from there yesterday, and now we're seeing some more gains. And in fact, WTI has just tested the week's earlier high before pulling back a little bit. But essentially, the trend is bullish following this V-shaped recovery that we saw last week. And this consolidation pattern we've seen in the last several days is a bullish sign in that prices have managed to hold the breakout. So for as long as this area holds, which looks like it has been the case now, I think the path of least resistance is going to be to the upside. And from here, we could well see oil start heading higher, but potentially towards 85, which is the next key psychologically important level. And then the April high will come into focus potentially in the days ahead, which is at 87.29. We'll cross that bridge if and when we get there. But for now, the key question is, can we see some further gains away from this consolidation area? Right, looking at silver now, and you'll have seen this chart before. I have shared this several times, and essentially what we're looking at is a breakout from this multi-year consolidation phase that took place in May, and since then silver prices have been falling, and this has allowed the RSI to work off its overbought conditions on all time frames, including the weekly, which is a good sign, I suppose, for as long as support holds. And one key support level to watch, which is being tested right now, is at 28.80, which was resistance prior to that big breakout on this weekly chart that you can see on the week starting 13th of May. So this level has been tested on a number of occasions, and so far we haven't seen a clear bullish signal from here, but we could see that happen following the release of the core PCE data tomorrow, or potentially next week when we have the jobs report from the US. Even if we deviate a little bit below this level, this will not necessarily end this long-term bullish trend, but ideally you'd want to see a bullish reversal signal form around current levels. Because if it dips too deep inside this former consolidation zone, then this will further weaken the momentum. Well, let's look at the daily time frame now, and on this time frame you can see that silver has been consolidating or going down inside this bullish flag pattern, which is very common for markets to do when you see a big move up. For example, if I draw a bull flag like pattern here, you can see that previously silver had rallied sharply, then it spent several weeks in this formation before breaking higher again. And now we're looking at a very similar picture. It is still inside this bull flag pattern, but the fact that it's broken this bullish trend line is not a great sign, I have to say, but it can easily reclaim that and go higher. So the key level to watch, 29.50, which was previously support prior to the breakdown earlier this week. If we were to go back above the broken trend line, I think that could be the reversal I'm looking for. But so far we haven't seen a very clear reversal pattern. So the wait continues, but it could happen soon. Now the equity markets have become a little bit more volatile in recent days, with the major indices around the world falling following their recent sharp gains. But the technology-heavy Nasdaq index hasn't given back too much gains, because we've seen the likes of Amazon and a few other technology names break to new record highs, while Nvidia has attempted to slow down its recent sell-off. So this has allowed the Nasdaq 100 to hold above short-term support levels like the ones I've got on this chart. But there is a potential for a deeper pullback, and for as long as this trend line remains intact, I don't think this will trouble the bulls too much. Today's close is going to be important because we've seen a bit of a bounce in the last couple of days, and if we can hold above the high of Tuesday's range, I think that would be a positive sign, which potentially could pave the way for a move towards that 20,000 level again, and potentially a break above it thereafter. But if I zoom out a little bit, you can see that we are testing this 200% extension of the last major downswing. So a bit of profit taking that we've seen here should not come as major surprise. Now, for more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.